Hey everyone, welcome to this week's Forex forecast for the week ending December 4th, 2020. I'm TraderBart and this week I'll be looking at GBPUSD, AUDUSD, EURCAD and XAUUSD. Just a quick disclaimer, this video is for educational and informational purposes only. This video should not be construed as financial advice regarding the purchase or sale of any financial instrument of any kind. For the full disclaimer, please head to my website, link below. Just a quick message, we are doing the biggest sale of the year, the Black Friday and Cyber Monday sale for up to £50 off the VIP group, where you can access our analyst live trades, our fundamental outlooks, as well as our technical outlooks. All the info is popping up on the screen right now. I suggest everyone take advantage of this sale. Moving on, back to the video. So looking at the overall market here on GBPUSD, we've got a clear ascending channel forming higher highs and higher lows. And currently we're about halfway through the next swing in the market as price bounced off the channel support at the start of November, and we're now on our way to reach the resistance. So looking at a buyer's perspective in this market and switching to the 4-hour time frame, buyers are most likely looking out for price action confirmation of a rejection to this previous resistance level here at 1.328 and looking for price to treat this as new support and continue the bullish move to the upside. However, looking at a seller's perspective in this market, price has failed to break through the 1.34 resistance here, which was the same level as the previous higher high in the channel over here. This level also lines up nicely with the rising wedge visible here, which price is now seen breaking through the trend line over here. And not only that, but switching back to the daily time frame, price is also forming a bearish Gartley pattern. So we've got lots of price action indicators suggesting a bearish move on GBPUSD. Also, sellers are backed by some institutions such as TD Bank and Credit Agricole, who are saying the pound is beginning to look expensive, and according to Brexit proxy indicators, GBP scores poorly on a mix of short-term valuation and growth, where relative mobility trends point to another run below 1.30. Also, with Biden pushing for a stimulus before year end, this will further strengthen the USD and therefore points more towards a drop in this market. Moving on to AUDUSD, I've got quite a mixed outlook on this market. Reason being, let's begin looking at this market in a seller's perspective. We've got this bearish butterfly harmonic pattern formed in addition to the double top at the 0.738 level. We could see the market respect these patterns and push price lower towards the 0.70 level. And also the AUD is relatively neutral at the moment, and the performance in commodities will remain the dominant driver and influence moving forward. However, looking at this market in a buyer's perspective, I've been watching the progress in this descending triangle pattern which broke out to the upside. Buyers will likely want to continue pushing price higher towards the 0.75 level, which was seen as clear support back in December of 2017. And I do slightly agree, as we've got a very weak USD currently, caused by market participants moving out of safe havens and back into riskier assets. This could without a doubt push price higher towards this 0.75 level, or even a monthly level such as 0.80. So hence why I'm a bit mixed on this pair at the moment. For now, I would pay close attention to how the Australian government will contain and deal with the COVID outbreak, because there aren't any clear signs of where market could be heading next. Moving on to EURCAD, price has been travelling within this descending channel since October, forming successive lower lows and lower highs. I pointed this out 2 weeks ago that price was approaching the channel's resistance. However, we're still yet to see a clear touch, rejection and bounce off the resistance. The bears in this market are likely to want to push price lower, targeting the minus 27% fib level at around 0.52. However, looking at the recent moves in the market, we can see loads of consolidation between these two zones here, between 1.546 and 1.555. And this is most likely due to the mixed outlooks on these currencies. The euro is highly dependent on the coronavirus outbreak, as countries are re-implementing second lockdowns. And all in all, compared to countries who are managing their outbreaks effectively, risks for the euro will be to the downside. However, the CAD remains stable with oil prices around $40 per barrel, but the coronavirus still remains a significant risk to economies and oil. Canada's monetary policy outlook remains key to CAD's fundamental outlook. Expectations for policy tightening will likely support the Canadian dollar, while expectations for policy easing will likely pressure the Canadian dollar. I would suggest waiting on more clear drivers before taking any positions, as there isn't a clear go ahead as where price could go next, because we could easily see price head down, but then again we could see a new trend form and price could break out to the upside. And finally, moving on to my best friend and enemy, gold, we've got this overall bullish flag pattern formed with price now at the channel support and just surpassing the 71% fib retracement level, which looking at the monthly time frame, this is also a major resistance level, which price is currently at. And going back to the daily time frame again, buyers are most likely looking for a clear rejection and bounce off this channel support, pushing price back to the 1855 and possibly the 1900 level. I'm still personally unsure on this market because we've seen in the past 2-3 weeks that vaccine news has been really pushing price down due to the US dollar gaining strength. However, the fact that market participants have moved out of safe havens and into riskier assets, this factor, along with the US dollar following unprecedented easing from the Fed in prior months, and now expectations for prolonged easing as the central bank has adopted AIT, has notably weakened the US dollar. Other negative factors for a weak US dollar include falling yields, political uncertainty, which has now been subsided, and the country continuing to fight its second wave of the coronavirus. It's quite hard to say what will happen next, but I think we could see price reversing from this zone here and back into the 1900 target. However, this is just a possibility. Take this information with a pinch of salt, because with the constant vaccine news, honestly, anything could happen. The US dollar is the most liquid currency in the world, and consequently the ultimate safe haven. Although the US dollar does not always exhibit safe haven properties, when markets begin to panic and participants dump almost all other assets to rush into cash, the US dollar becomes the safe haven of choice. But like I said, take this information with a pinch of salt, because anything could happen. With everything that I just spoke about happening all at the same time, the market could be all over the place. Okay guys, that's about it for this week's video. Don't forget to take advantage of the Black Friday and Cyber Monday sale going on as mentioned at the start of the video. Or if not, you could always join for free if you just sign up with my broker. More info in the description. Remember, as always, stay safe in the markets, and hopefully I'll see you guys next week for another weekly Forex forecast. Take care everyone.